those numbers could, those 4 or 5 points could change. Obviously, it all depends on volatility. Yesterday we were more 3 or 4. The VIX is now up to a 25 handle, so it was 23 yesterday. So this is still manageable as far as craziness is concerned. It gets we start breaking down even more, and we might have a little bit of an issue. So we'll see what happens. It's coming down here to the 58 area now. Again, if the volatility is too great, then just be patient and wait for the market to settle down a little bit. As you can see, it's extremely volatile here this morning. A nervous trade. The market is very, very nervous here. Working this 58 area that we have. Again, if some ways to handle the volatility is trade a little smaller, and maybe find if you are scaling in, be a little bit careful with your scales, pick your spots a little bit better. There are different ways of managing the risk, the inherent risk that comes with extra volatility. As you can see, that it's chopping around here 2 points easily, no problem. So this is going to be, you have to consider that as you are trading, as we are trying to bounce here off of our 54 area, and we've gotten 5 points here very easily here. Well, not very easily, but we got a nice rotation here against our 58 area. That just took a little bit of heat there, not too bad. All right, nice little rotation there against our 58 to 58 level. If you look at the chat box area, those are the levels that we gave out. That's our first support level there. Again, we are looking to scalp the market, so we're not trying to hold on to stuff. We don't know if it's going to go back up to the highs. We don't know if it's going to continue down to go and making new lows. We don't know. We just are trading the opportunities the market presents itself for us and trying to find a way to scalp the market off of those opportunities that we feel the market will give us a chance to scalp the market. We're not here to hit home runs here. But sometimes if you get into a nice entry point, and if you're trading multiple contracts, you scale out, and if you keep 1 or 2 or 3, depending on what your risk tolerances are, and then you can be able to take more than 4 or 5 points on a trade, but you need to have a trailing stop and blah, 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 ways to manage your trade. That's the other alternative. You have to be able to manage your trade once you get into it. There's a whole set of circumstances. Anything I say here as far as our levels are concerned, or opportunities as far as price action opportunities, all of this is a taught experience. We have an education course that teaches you how to find these levels, how to trade them, how to the opportunities there when there's more volatility, and what you do to help you maximize profits. That'll come. That's part of the conversation we have in our education package, so that you can maximize profit and become an independent trader. So the jobs number was a big hit. They were expecting 180, came out at 467. Expansion of the economy, the growth is good. Consequently, you've got nervousness in the bond market there, because that's the criteria there for the Fed to raise rates is the unemployment market. And that's one of the criteria that if it's doing well, that they they can start raising rates, and there you have it. So you have a little number, even though you got a good number. Boom, market does its thing, So that's why we don't like to take positions here. We just trade the after effect. We don't like to have positions on when numbers come out. As we are just testing this 58 area here, we already took our profits against that rotation off of it. And now we're just kind of sitting back and we'll wait for our next opportunity. The support on the downside is 50. Right now, on the upside, well, we already tested our pivot off of that 58. So if you were looking to get in there, maybe that was a good place to get in if you were looking to get short. But that was maybe also a place to take profits against our 58 support area. So again, different ways of trading markets. We are trading S&P futures, equity futures, mini S&Ps here. We do this on an everyday basis with our room that we have, in addition to our education course that we offer as well. And now we're continuing to rotate back up here. So again, you have to be careful of the 74 because we already tested it, got up to 73 there and change, and then came off. So if you're risk averse, I would probably be focused more on the 82 area instead. As we're coming back up here to the 74 again, that's not to say that it won't work again. I'm just saying that it already worked once. So if you are going to take it, it's a lot riskier. And if you're going to take it, just scalp it maybe 2 or 3 points on this little rotation with a tighter stop. That way you don't get caught up on the move. Again, there's different ways of trading. There's not one correct way. You have to understand your risk tolerance and trade it accordingly, and also understand the risk of a level once we've tested it, and we did that already. So we got in a little rotation here, a couple points if you did take it again. That would be a nice little quick little scalp here, even though the market's there. And you would have had a really tight stop too on the upside. So, I mean, if you're going to do that, you're going to have to keep it really tight. But again, it was just if you were going to take it, it was a retest of that rotation. So with that in mind, you also have to have a tight little stop. Next level on the upside we have is up at the 82 area. Again, we're not trying to hit home runs here. I mean, we came off at 74 and then popped all the way down to our first support level. Then we're coming back up here. If I knew we were going to do that, I would have told you to hold on to them, but I didn't know. So, again, if anybody has any questions, feel free to ask in the chat box area. I don't mind questions. Let's see here what's coming out in addition to the non-farm payrolls number. Let's see if there's anything else coming out. Next resistance area we have is up at the 82 area. Swiftly coming up to this area now. Again, whatever the situation is, you keep your stops in place. We are not going to love any trade that we put on. We're just trading the market, taking advantage of ebbs and flows. Yeah, I mean, you could always, but nobody. I mean, the revision is a big part of the trade here, but most people don't even bother looking at the revision part. All right, again, we had a scalping opportunity there against hopefully we were able to jump in, and you can see how we was trading on that level. Nice rotation there off of, well, that's 58 area that we had as support. And now we're coming up here and testing this 82 again. If you scaled in to maybe 81 earlier, maybe you took some profits, and then maybe you're looking at the upper end of the range here now. And maybe you're peeling some profits off of that as well. Okay. Hopefully you were able to adjust there once we got to 81 and maybe take the upper end of the range on your scale. And you got a nice little rotation off of that. Either way, should be doing okay against this level. It's giving you a chance here to decide if you want to stay with it or not. Again, everybody gets in differently. Everybody scales in differently. There's not one right way of doing this and one wrong way. You have to understand your risk tolerance and trade it according to what you feel comfortable doing. Most important thing here is that you feel comfortable in entering a trade around an area. If you're trading multiple contracts, if you're trading one contract, you have to know where to get in, make adjustments according to what the price action was if you didn't get filled. Different ways of handling a trade, managing a trade, and that's what I'm talking about. All right, so the market up here now, kind of testing. If you didn't get in at a better price or you are not scalping it, it's giving you a chance to, get out of it for a scratch. So it's up to you how you manage those trades. Again, everybody trades differently, like I said. So we have no other economic reports coming out this morning, just the NFP, non-farm payrolls. Everybody looks at the percentage number, which really is not what the market looks at. That went up, I think, if I'm not mistaken. It is likely to be bad when warnings keep pouring in about the January jobs report. White House Secretary said that she wants to be prepared. The public, the National Economic Council director, is calling it confusing, and even the Labor Secretary said to take the figure with a grain of salt. That's funny. I would have assumed that most of these people knew what these numbers were, but then they're all sitting there telling you to be careful. So take that for what it's worth. All right, next level on the upside is a 95. Again, placing your orders in the market there. One way of making sure you get filled on those markets are moving very, very fast. So your scale or whatever you're trading, however you're trading, just keep it, stay focused and make it so that you're comfortable when you have a position. I know it's kind of rocky, the market, very thin, but the opportunities are there. It's how you manage those trades once you get into them. The Bureau of Labor Statistics collects jobs data during the pay period that includes the 12th day of the month in January. That week coincided with the new Omicron case peaking in the United States, when millions were calling out sick, quarantining, or caring for others. If staff were not eligible for paid leave, they are going to be marked down as not working. January is also a month with extreme seasonal adjustments. While household survey data could be affected by new establishments and population controls. Downside support now we have is around, if you're aggressive, maybe around the 69 area, but only if you're aggressive there. Also probably our pivot there at 65. If you're going to do one, probably do both if we rotate back down. The Fed Chair Powell has said that he doesn't place a large amount of importance into any 1 month of data. Jobs data as a month-to-month figures can be volatile. The funny thing is, the big misses have happened multiple times in recent months. December was 199 versus 400. November was 210 versus 550. September was 190 versus 500. August is 235 versus 750. So this time they missed on the revision by the opposite side. Paid sick leave is also known as available for 79% of civilian workers, according to government data, so the forecast should reflect that. over the course of 2021. The 1.9 million payroll additions were still added to the economy, but with severe misses over many months, do we need a better system to calculate the non-farm payrolls or estimates? Who the hell knows? As far as the jobs number being weak, I don't know if anyone's going to give it much credence. You clearly got Omicron cases collapsing. You're seeing high frequency data showing some pretty significant pickups. A weak jobs number means a longer runaway for inflation until workers come back to the workforce to provide relief from the widespread shortages. Well, I mean, the ADP data is you shouldn't correlate too much between the ADP data and the jobless number. ADP data, remember, is private sector. The non-farm payrolls includes government workers and everything like that. So it's a totally different. I mean, they look at it, but they used to look at it more closely, but they don't look at it closely anymore as much as they used to, because that would have rocked the market on Wednesday, and it kind of didn't. All right, so we are kind of coming off there. It got up to 87 and change there, and coming off here a little bit. Support, like I said, would be around the, well, let's say our pivot area, anywhere between 69 and the pivot. If you're looking to get long, and keep your stops in place, no matter what they are. Again, we are trying to find opportunities to scalp the market in both longs and shorts, depending on the market movement and volatility. We're scalping the market for about 4 or 5 points on these trades. We're looking for areas of inflection that we feel the markets will rotate off of and give us a chance to scalp. We also look for price action momentum trades, but the market has to set themselves up for those trades. Will the market set up for those trades? They do have, we look at the price action to tell us. So if anybody has any questions, new folks that are in, if you look at the chat box area, you will see the levels that we gave out this morning as a guide to the day. We can add to them, we can subtract them, we can tweak them, we adjust them. All depends on the price action and volatility that occurs during the day. And there they are. Thank you, Don. Well, how do we obtain? Well, that is the work that we do in our education course. We kind of show you what's important to kind of look for. It's basically just a lot of technical analysis that we do. I don't think it's unique to us. I think it's just a matter of how you perceive or how you look at charts and how you decide what areas are important, and also look at the volume that's traded at those areas to help you with these opportunities. So it's a combination of a couple things. We use a 5-minute chart in addition to an hourly chart. The chart on the left is a bond chart, so that kind of gives us an idea where the bonds are doing. Sometimes helps, sometimes doesn't. But the combination of the hourly chart and the 5-minute chart, and we also use other charts for longer levels that we are kind of targeting. But it's a combination of a lot of things in this that we look at, mostly the technical analysis that we do to help us find these levels. All right, so we said we have support between 69 and 65, and it did drip down to get down to 67, right smack in the middle, and a nice rotation there if you did take it halfway. I don't know. Again, we talked about finding areas of price action opportunities. There was a price action opportunity that we were looking for, and you got a nice rotation off of that. Again, we're looking to scalp the market. We're not looking to hold on to stuff. It's not what we do here. We're taking opportunities to scalp for about 4 or 5 points, depending on volatility. That could change. The markets change also. Maybe it'll be tighter once the day goes on. Maybe you have to expand it if some more craziness comes in. We never know. You're an independent trader, and you're going to make those adjustments based on the price action that's occurring, and that could change. Same for SPYs divided by 10. Yeah, well, yes, the mini S&Ps are the futures contracts that trade online, and the big S&P contract is a totally different contract, which only traded in the pit, but the pits are not there anymore. So you have now you have a micro and a nano and a way for the exchange to make money. So they add different contracts in there to make it cheaper for you to trade, I guess. It might be cheaper for you to trade, but it might be harder to make money. That's the so yeah. But we trade the minis. It's 1 point between, let's say, 69 and 70 is $50, and each quarter point obviously is $12.50. And we are trading the minis, but you could, the micros trade almost tick for tick if you are that, and that trades at what is that, 1/10 the size, I guess. So it's $5 a point, I guess. Yeah. What number we use on the Bollinger Band? 21 and 22. We kind of combine them, so it gives us a darker image there. So. All right, nice rotation there against the areas of support that we talked about, 69 to 65. We got right down to 67, and I had a nice rotation up here. If you wanted to get long, we suggested waiting for those areas before you jumped in. And we're getting a nice rotation here. And if you want to try to take a little bit more out of the trade, then you can. Again, we are trading mini S&Ps, looking for areas of that we think the markets will give us a chance to scalp the market, both on the long side and the short side. And we're not taking any long-term positions here. That's not what we do. We're just trying to scalp the market, give us opportunities. We focus more on the morning hours for those opportunities. We feel that there's good ebbs and flows. The dynamics of the market in the morning are different than the dynamics in the afternoon or as the day goes on. And we focus more on the morning hours to help us with our scalping opportunities that we get. We feel that those dynamics suit well to our methodology. And we focus more on the first couple hours of the day. In addition, we're looking to average, I would say, 4 or 5 trades a day. But over the last couple weeks, we have definitely exceeded those numbers easily. We try to minimize the expense we have with the brokerage firms that we have. Last thing you want to do is overtrade and give them commission fees for no reason, because they're not really nice. I recommend a lot size based on the size of your account. Well, there's a couple things there. Obviously, that's all a matter. So you have to remember, how many contracts you trade is not important. It's how you feel comfortable when you're trading, and how many contracts you put on when you're trading. It's more important to put on a size that That's if you look at the market and you look at the price action and you know where your stops are, that you're comfortable with your stops, and that you're not going to get weirded out like right now we're 4 or 5 points. And if that's too much for you, and if you only want to risk less than that, then obviously maybe you shouldn't trade. All right, if you're risking that much on trade. So lot sizes to me is something that you have to feel comfortable trading, because every time you put on something more than you're comfortable doing, you don't let the market dictate the entry points and exit strategies. You let your position uh, uh, dictate the trade, which is not really advisable, right? I mean, you're finding you should find areas that you should trade the size that makes you comfortable with the position and doesn't scare you out of position because the market goes against you, especially if we're looking at 4 or 5 points as far as our stops are concerned. So obviously, your account size is going to determine. Your account, is going to determine how many contracts you can trade, Mac. But that doesn't mean that you should trade that amount, right? You have to trade the amount that makes you money more than anything else. And then as you get comfortable trading 1 lots, 2 lots, then you go to 3 lots, 5 lots, and you get comfortable doing that, then you get up to you slowly increase your size by how comfortable you are when you put those on. I mean, I could tell you when I started trading, if I put on a 2 lot, I got nervous, and then if I put on, when I tried to increase my size and I put on a 5 lot, I was like really nervous. Then you get comfortable with that, and then you put on a 10 lot, and there's another set of circumstances that you have to deal with as far as managing risk, your own risk, managing your own temperament. Those are all part of growing pains if you're going to increase your size. So, yeah, I mean, if you put $100,000 in your account and that allows you to trade, 100 lots, yeah, you could go ahead and trade 100 lots. But are you going to feel comfortable trading 100 lots? 100 lots? No, maybe you are. And if that's cool, if you feel comfortable doing it, then that's great. So here's my long answer to your, should have been a shorter answer to your question. All right, nice rotation there against that support level that we talked about. We already tested this 82. Our next level of resistance we have is up here at the 95 area. Market is very, very nervous. I mean, we did have good blowout numbers from Amazon that we did do it. That's why the market was up. Facebook collapsed it yesterday. Facebook will still be looking for friends after a massive plunge. And it's its parent, Meta, lose $251 billion in market value. The biggest single-day equity wipeout ever. But things were more welcoming to Big Ten Amazon. Amazon reported a set of bumper earnings late Thursday after the market closed that smashed operating income and earnings per share expectations, sending shares up 12% after the bell. In fact, divergence in stock prices saw Mark Zuckerberg lose $29 billion in net worth and Jeff Bezos adding $20 billion in personal valuation. Okay. There's something wrong with that statement, that sentence right there. Just saying. There's something wrong with that. Anyway, good for them. All right. So yeah, that is going on there. So the market was doing well overnight. Then once Europe opened up, nervousness came into the market. Maybe they kind of knew what the number was. I can't believe I just said that. And they sold it off here a little bit. All right, we're kind of just hanging up here, these upper levels. Next level of resistance, we can see things have slowed down a little bit, even though the markets are kind of whipping around, but you have to pick your spots. Find areas that are important instead of just jumping in because you see the markets trading on the screen here. You need to find areas that will give you an opportunity to make money, and patience is important in finding those areas. We had support there. We talked about the support at the 65 to 69 area. And if you did jump in, that was a nice little trade. And now we're just kind of hovering here. This is what I like to call the no trade zone, because it could go either way. Could go down, could go up. You'd be guessing. And guessing is okay if you make money. Guessing is not okay if you lose. Then create all those commissions for the brokerage houses. Beijing Winter Games officially kicked off today, but you won't know that from the latest slate of advertising campaigns. Many companies are facing pressure to acknowledge China's abuse of the minority Uyghur population in Shanghai, along with other human rights issues and authoritarian control. Top American sponsors like Airbnb, Coca-Cola, Intel, Procter & Gamble, and Visa are lying low in their Olympic-themed commercials, and there haven't been many displayed on TV or social media in the United States. All right, so we are just kind of hovering here in this no trade zone area. We already tested the support level that we had around the 65 to 69 area, so we're not doing that anymore. Kind of just really support level we have on the downside. We already got the 58 area. That's our first level of support that we got. So I guess we're looking at the 50 area as our next good support level. And upside, looking more at the 95. And I know it seems like, oh, I'm not going to do anything in the middle. Well, I mean, you could if you want to. But, I mean, we did do well with a few trades that we had this morning. So you can definitely be patient and pick your spots. And this is on heels of unemployment number, which was a good blowout number, that's for sure. But as you can see in the bond market, put a lot of pressure on the bond market because that means good economy, faster inflation, more Fed intervention or quicker Fed intervention. They're already intervening, hopefully. That's the plan anyway. And the market's kind of absorbing that plan. Doesn't like it. But then again, it's very important. As far as a weekly chart is concerned, it's very important that we close above the 44.20 and change area. That'll keep us above the dominating bar from last Monday, which is an important technical value. And then we'll see what happens from there. So we need to close about 44 and change, 20 and change, 44.20 and change. And if we close inside of that range, we're back into that dominating bar from last Monday, which was a big day. Technically, that could cause a little bit of an issue for the market. We shall see. From a technical point of view, I don't know what's going to happen. You just know that moving 40 or 50 points is not a big deal anymore. That we know for sure. All right, well, we're just kind of hovering back here. 69 is the settlement price, so basically a lot of nothing's happening. I think we might have caught our range here so far. We're trading in this little range and might be staying in it for a bit. I don't know. Who knows? We have our areas that we're going to be focused in on. And right now, like I said, this area right now would probably be in a no trade zone area because you'd be guessing as to which way this is going to go. If anybody has any questions, feel free to ask in the chat box. We don't mind questions. And we can try to give you an answer to anything the market is doing, if whatever we can. And again, we are just kind of bouncing around here, going nowhere fast. You too, Philip. You have a great weekend as well. And see you on Monday.
Hey, I want to know where our little buddy's at.
Oh, yeah, he's taking an extended vacation. That's what I heard. He needs some time. So we gotta give him some time. You know, it is what it is. What's up with you, man? How are you? How's you surviving down there?
Well, we're okay here. It's just cold. We're down to 32 this morning.
32.
Yeah, the wind's blowing, but
oh, are you getting a little wind chill? Is that what you're telling me?
Only when you stand out in it.
Yeah, stand on it. That's funny. Yeah, I know. Tell me about it. We get that here in Chicago all the time. So I'm with you on that one.
There's a question for you. Does the wind up there at certain directions seem like it just cuts through all your clothes?
Oh yeah, for sure. There's no doubt about it. Especially if it comes off the lake. Oof.
Yeah.
It's getting nasty here.
Yeah, we get an east wind here, and it's like that. It just kind of like you can't put on enough layers. It seems like it just cuts through every one of them.
Oh yeah, you got that right. Doesn't matter sometimes. I mean, you just you can bundle up and this and that, and you're like, just get away. He's got to go inside. There's not much else you could do. I mean, I wish I could tell you there'd be a better way of escaping it, but there isn't.
Right here where we're at, we're in the lower southeast Texas. The northwest, the northern parts of Texas, like Austin and up, they're getting a lot of ice and stuff.
Mm-hmm.
But it's all shifting to the north of us.
Right. Yeah. It is. So you're not having any power grid issues?
Not here right now. We don't have any ice. I mean, there's. I think they're anticipating maybe tomorrow morning down to 29 for just a little bit.
But then again, I won't be here. I'll be out of town. So don't forget Wednesday, Thursday, Friday, and Monday.
And Monday, okay. Sure, you don't want to pop in and give the numbers?
I'm not going to be in front of my screen, so no, you're on your own on that one. You're okay with it. What's the problem?
Oh,
you just give too many.
Well, yeah. Then I look at them. I said, well, I probably need to spread these out a little bit. People aren't going to know what to do with all of them.
Yeah. All right. Now we're coming up here again. S&Ps, I don't know what's going on all of a sudden. They got their bullish legs on. Kind of just made this little run here. You never know when these runs happen. That's why we have to keep our stops nice and tight. Well, not nice and tight, but just keep your stops in place. 5 points is not a tight stop. But that's what we're looking at these days with these market moves. So again, like I said, we didn't know which way it was going to go. We just have to keep your stops in place. We talked about the no trade zone chopping around in there, and we had a 25-point rotation here, basically on air. So if you were playing the range game here, the market does a great job of getting you out of any range game that you've been doing or whatever. So, and again, if I knew it was going to go one way or the other, I would have told you. Bonds here pushing a little bit on their lows, kind of extending new lows. So I don't know what's going on there either. It's just all of a sudden something's happening. We're not privy to that news right away. That I can tell you. We're always behind the 8 ball on news that's being released. We just know we have a little resistance up here at the 95 area. And we'll see what happens there when we get there, if we get there. Do you like watching the Winter Olympics, Don?
Yes.
Yeah. I'm just not a winter sport guy. I mean, I watch it, but I I wouldn't turn the TV on just to put it on. I know.
Yeah. Last night there wasn't anything on, so that's what we watched.
Right.
We watched some of it. Some of it is, I don't know. The caliber of athletes that we have now is just amazing to me.
Oh, they're so good. Yeah, they're just the younger kids coming up are really awesome. Some of them are awesome.
They must eat and sleep that stuff 24/7.
They do, and not only that, but you need the commitment from your parents too to be able to give you that opportunity. You can't do it on your own because these kids have been doing it for a while now.
Yeah. I can't imagine that kind of dedication.
Yeah.
Sometimes I wish I had it.
Well, I mean, maybe you did it when you were young and just forgot.
No, I never had it.
You never had it. Okay. All right, we drifted up to 92 really fast and came off, 92 area, and came off. We have 95. So even though we ran up there, Still looking for that 95 area. See if we can get an opportunity to scalp the market around it.
Even though it's not going where I thought it should go, it's giving me enough runs to.
Yeah, I mean, you are getting some. I mean, this is what happens with these markets. You get some opportunity. So there's a risk reward type of situation here where if if you're looking for price action opportunities and it doesn't work, you keep your stop in place and then you look at the next opportunity, because these days you are going to get ample times to trade. The only problem is we try to minimize those so we don't give too much opportunity for the brokerage houses to make all that money. So pick your spots. If you like to trade, you're going to get opportunities to trade. If you're looking at price action opportunities that are out there, just be patient and wait for them. But again, try not to overtrade. Again, we're not here to tell somebody here what trade to put on, what trade not to put on. We're just giving you areas that we feel the market might have an opportunity to scalp it. And then you have to be able to figure those areas out put those areas and trade them on your own, because I can't. Nobody here trades the same, and so everybody here trades a little bit differently. So you have to find the right niche for each individual trader here to be able to maximize profits. So we do this on an everyday basis here. So
I have a question for you.
Mm-hmm.
Is there a way to look at volatility and determine what your stops should be?
Well, yeah, I think you could gauge it that way. I think if you get into the low 20s, you're maybe, probably 3 to 4 points. In mid 20s, you got to definitely go to 4 to 5. You get to the high 20s, you're probably doing 6. You get into low 30s, you're doing probably around the 8 area. So, yeah, if you look at the volatility index,
we're trading at 24.25 today, so we're going to need what, 3?
Yeah, 4. Yeah, 3 or 4 points, somewhere in that range, right?
Yeah.
Because and that's only to deal with any slippage that might occur that against an area or a level or an opportunity that you feel that it's just I think something that you should consider if you're trading, that you can't keep the same stops in if you're trading, and you have to adjust those to the volatility that's in the market. And it's just have to, otherwise you're not going to give yourself a fair chance.
Yeah, you get stopped out too much, and I've heard this from a lot of different people. They said, well, if we set a 1-to-1 stop, we get stopped out. I said, yeah, but a lot of it is you're not allowing the market to move any either. You have to be so exact.
Right. It's impossible to be so perfect.
Yeah.
And not when you don't have control of what's going on. We don't have control of the volatility.
Yeah.
So
I know day afternoon, it was brutal.
yeah. And it's been brutal after the close, because they put out the earnings from yesterday was Amazon, the day before was Facebook, and so you had a big break on the day before and yesterday in the big rally. It's tough to trade that. I mean, that's late in the afternoon. That's after the market closes. Don't ask me what I was doing watching it. Just watching it. Remember, I said watching it, not trading it.
I wish I'd have been watching it.
Yeah. You have to be careful. Got to be careful. All right. Again, we kind of inched our way up to this. We got up to 92 here. We had 95. So if you're risk averse, maybe you adjust a little bit to get the upper end of the range here, maybe, if that's what you are concerned about. maybe if we extend here a little bit, maybe we go and get this 95 on the next rotation. I don't know. I don't know what's going to happen. Right now, got support down around the, well, still that 65 to 69 area. Again, we're still stuck in this no trade zone area here, even though it's moving around. But like I said, you'd be hard pressed to tell me which way it's going to go. If you're trading and you can trade a lot, then you feel that, if you're trying to catch one of these moves, then okay. But we're just trying to pick our spots, be patient, and wait for the market to give us an opportunity.
You like the 04 better than you did the 02? Or you just doing it because of the slippage?
Yeah, I'm doing it just I'm doing it because of the slippage.
Yeah, okay. Now, a question for you. When we start getting up in that 27 to 30 range, or 26, 27 range, do you have to allow 3 points above where you think it's going to stop at? Is that going to be a little bit too far?
Up on the upside?
Yeah.
Well, I mean, why that area versus what? I mean, why would it be 3 points? Why?
Well, I guess my point is, the higher the volatility, that it seems like the market takes off and it'll hit that level and shoot through it, then it'll come right back down through it.
Mm-hmm. So you're talking about the overnight high?
No, I'm just talking about any of them that you were happen to.
Oh no, I mean, right now I would stay. No, I would keep everything the same.
Okay.
It's not until we are still kind of whipping around. I mean, you see these 5-minute bars are 10, 15 points, so it's they're still moving around.
Yeah, I love it. I don't know why I'm saying that. I'm done.
Mm-hmm. Yeah, so am I. So
it's been a good morning. So and it's Friday.
Yeah, it is Friday. That's true. That's important. You can have a good week and a good weekend without having to dwell on the worst thing to do is, like I've said this many times, is to lose money on Friday. Can't come back the next day and trade.
Yeah, or get into it. It took me last night to finally get out of everything. I'm going, man. It sure seems like it makes for a long trading day.
Yeah, especially on a Friday. It's been last 2 weeks have been very busy. The first couple of hours, we focus again on the first couple hours of the day. We've been busy. We were easily getting more than 5 trades a day, easily. A lot of times doubling that number. So
easy.
And again, if anybody has any questions, feel free to ask away in the chat. And we're just kind of looking for the 95 area here. See what it wants to do if we get up there. Again, because we got up to 92, might have to make a little bit of an adjustment there if you're a little bit concerned about the 95. What was that, Don? Sorry, cut you off.
Because I started early this morning. I started before the open.
Of course you did.
Well, it was there. I'm going.
Yeah, they were busy this morning after the number came out, the unemployment number.
If it was such a good number, why'd they tank it?
Because look at the bond market. The bond market is quickly running up the yields. They're saying that the expansion is too quick, and it's going to create more inflation. And so the bond market is creating this push to the downside here. And we're up, but the initial push to the downside.
See, and I don't understand the bonds.
Well, you got to look at the bigger picture there. You can't look at, you can't trade them, but you just look at the bigger picture. Yields are going up. So, I mean, this is the dynamic here, that the problem with the market is that yields go up. That's not good for the market, but we're still at almost a 45 handle. So nice rotation off the lows there that we got. But again, remember, I think we have to, on our dominating bar situation from last Monday, we have to try to stay above the top end of that bar, which is around the 45, 44.20-ish area. If we can do that, it'll be better technically. But
did you show a gap yesterday and the day before between the shutdown and the open of yesterday?
Oh, well, yeah. I mean, obviously there was a gap there, but
I'm talking like a 40 or 50 point gap.
Yeah, there was. Somebody's asking you a question, Don.
Oh, Julio, I usually get in here about 7:30, and I'll turn the computer on
Central Time.
And if the setup is there, and I looked at it and I said, okay, we ought to be doing this, so I'll take the trade. If my reasoning is good enough, sometimes I get ahead of myself and I put it on too quick, and it doesn't work out. But just depends. Just if I'm up early, if I'm up at 5:30 and I'm here, then I might as well be making some money.
All right, a quick pop down to our pivot area there. If you were a little aggressive, you had maybe you had to have your orders in there to be able to get those. Maybe you did jump in there. There was a reason to put those orders down there. A couple of reasons to put those orders in around their pivot area. If you were aggressive and wanted to take that opportunity, you had a nice little price action opportunity there against that pivot area. Nice little trade there.
It went right down to that 64.
Yeah, there's a pivot there, 65. Blue band there. A couple good reasons to jump in. All right, nice little trade there if you did get it. Again, these markets are moving so quickly that you got to find your areas, have your orders in place, and that way, if it gets down, you never know when it's going to get down there or up there and tick you off and give you a chance to trade. And this was a nice little opportunity there for us.
It seems like for the last 2 days, between 11 and 1, they get range bound big time.
Yeah. Oh, for sure.
But don't be there after 1:15.
Yeah, no, the afternoon trade is just tough. No other way to explain it.
The problem that I see with it is there's no rhyme or reason to what direction it's going to take.
No, it has its own. The only thing we could do is find areas that we believe will work and that worked in the past, and you feel comfortable taking it. We always talk about recognition of a trade. Everybody kind of looks at markets a little bit differently, right? And you have to find those trades that fit your mind's eye, and that you could recognize it on the chart and recognize it and have a good reason for it. We are always talking about having reasons to trade, and obviously, the rotation here down to the 65 area was a reason to trade. Multiple reasons. We discussed those reasons in our education course over and over again, so that you feel comfortable in finding those trades. And recognition of the trades is one aspect of trading. And then the second part that we always talk about is execution, which is the part that most people have a problem with. You can find a trade, and how do you get into it? How do you manage it? How do you trade it? How do you get out of it? Those are all part of each individual's mindset and risk tolerances. So it's an individual. That's why trading is such a difficult thing, because there's not one right way of doing this and one wrong way of doing this. Do you only take trades in the direction of higher time frame, or do you sometimes trade against the trend? Well, we kind of do both. I mean, obviously, we're trading against the trend when we break from the highs back down to 65 area. But I mean, we also had a reason to jump in. I would say right now there's a good momentum trade if we get below if we get below the 54 area, we have next level we have is down at 50. So that might be a little bit close considering we got down to 50. So the 54 area on the downside might give us a little momentum trade down to our lower levels. But yeah, we do both. We're not just using. We kind of look at we're always letting the market dictate what our moves are going to be, and if we're fading the market, or if we're using momentum trades, that all depends on what the market is telling us. All right, now we got to be a little bit careful here. The market has kind of gotten, all of a sudden, kind of blew off that high there. And like I said, I wish we got up to 95, but we got up to 92 and then came off, which was kind of annoying because this is a nice break here. Right now, really a nice good support. Well, 50 area is a little bit not as strong as it was initially here. So I think if we get below maybe 54, we might rotate to the downside more. So be careful around the 50. And look at the 40 areas are a little bit better support. But weren't we talking about the upper end of the ranges now? We're talking about the lower end of the ranges about 5 minutes ago.
Yeah, it's doing what I thought it would do.
What did I tell you about thinking?
I know, yeah, but today it's made me money, so I'm happy.
Okay. All right, you're stubborn. You're just a stubborn old guy. And I tell you not to think so much, and you start telling me this is what I was thinking.
Well, yeah, but I started thinking this at 8:30.
Right, that's the problem.
We got to the 62. Now, if it'll just touch the 54.
Yeah, it got weak here all of a sudden the last 10, 15 minutes. Who knows why? I don't know why it rallied. And then, I always keep saying that the market wants to go down, it has to rally first, and vice versa.
I'll probably yank it back around, send it back up to 80s. When I'm not playing, it does what it's supposed to do.
Right. All right, so we're coming down here. Yeah, we didn't get, I think we got below 55. We might rotate a little bit lower. We'll see. 54, I should say. So be careful there around the 50. For whatever reason, market's getting a little bit weak here. It's a good thing I said that.
Yep. I like that 54.
Yeah, you did.
See if it'll get it to 64. That's what happens when I get greedy.
That's,
I do have that problem.
that's hilarious. It's called discipline or lack of.
The lack of fits it better.
It's called discipline or lack of. That's funny. We all have that problem, by the way. It's not just unique to
Texas.
Texas. Yeah. If you're trading, that's why I highly recommend that. It's very tough to watch the market trade when you are itching to get into a trade. I mean, you're watching it move around and you're like, all right, I see the market develop this trade. I notice I like this reason. I like this trade for a reason. And you're in front of your computer and you're like, all right, this is setting up beautifully for me. So you take it and it works, and then you know, okay, that's it. That's my last trade. And you see something else set up, and you're like, okay. And then what happens is when you finally look at that trade and see, hey, it's really going to work. I really like this trade. You put it on and it doesn't work. And now you're pissed. And now you're like, okay, now I got to get that money back. And then you do it again and it doesn't work again. Now you get yourself into a complete ball of disaster. That's when you get in trouble. So the discipline is to say to yourself, all right, if I make that one next trade, no matter what, if I lose or make money, I'm done. Then that's good. But if you keep, it's hard to stay on the in front of your computer with the ladder ticket going. You're looking at your charts. You see a trade develop, and you're like, okay, I think I could trade this. Again, if you're do this all day, you're gonna get very, very tired, and your reasoning or logic for getting into trades definitely changes as the day goes on. The dynamics in the market change, so those things that work in the morning don't exactly work in the afternoon, and that becomes a little bit of a problem also. But you're still looking at the same dynamics, so you get yourself in a tizzy. So that's why if you made your quota, you're good, you're happy, you got some good trades this morning. And if you can handle watching without trading, then you're doing good. You're doing good.
But it's so easy to get 4 points now.
It is, and it's also very easy to lose 8.
Yeah, it is.
Very easy to lose 8 too. If you think it's easy to make 4, it's a lot easier to lose 8. And the only reason that you get this little talk from me is because I've been there and done that. It's not like I don't know what I'm talking about. Been there, done that. All right there, Patrick. Good job. All right, Bernard. There. See, as long as you can, yeah. I mean, it is very difficult to just watch. That I will tell you. And I wish I wish I had a sim, but I don't.
You need to put your mouse in a lockbox and throw away the key.
Well, again, discipline. All right there, Patrick. All right, we're making this move here to the downside, looking at the 50 area, but I said, again, be a little bit careful there around the 50 because of the price action prior to that. And so trade it a little bit smaller, maybe, there's a push down a little bit lower here. Not surprising. Again, we talked about the trade around 50 being a little bit suspect. And that's what's going on now. So we talked about waiting till the 40 area. Again, we're looking at the 40 area. We talked about the trade being a little bit suspect around the 50 because of the price action prior to that. I'm looking at the 40 area now. Next is a good level of support. Let me give you some other levels on the downside here. 28, then 15, then 44.04, and then 95.
I didn't give that 46. I had it sitting right on it. Oh, well. Let's see if we can do this. Let's see. Let's see. There we go.
All right. So again, we talked about the 50 being a little bit tenuous. I'm sorry, Derek. Don, do you see that question there? How do you approach a starting point for scalping when moving up beyond a level or for long, or moving down for short? Well, I mean, moving up a level.
Well, I've got your levels and I've got areas that I will trade off of if it gives me a good excuse to trade off of it.
So how do you approach a starting point? So how do you enter a trade when moving up beyond a level for a long? So what are you trying to jump an area? Is that what you're saying? Or see, I don't know if we're going to be moving up, if I'm going to go long, right? I mean, if I have like the 50 area, if I knew it was going to stop at 53 or 54, I wasn't going to, I can't change it because the market did it too fast, right? So you're at the mercy of the volatility in the market and what the market stops and starts at with different bars. So the only thing you can do is if you have a long position, like we had this 50, that's what we like. And we got down earlier to 54 and the price action was telling me that the 50 wasn't going to maybe be a good entry point. So I was going to adjust my long, not higher. It would have been lower, if anything. But there's a reason that I would adjust it lower because there's a backup for me to that I feel that I should use. So, but the other thing I did say was cancel the order altogether. So basically, what I'm trying to say is that you have to take your cues from what the market is telling you and the prior action before a level gets triggered. You can't adjust that entry point if the markets are trading and you have an entry point, let's say at 50, and it stops at 54 and goes back up. I mean, that doesn't make you. Yeah, where are you getting in, right? I mean, you want to get the 50. You don't want to get it 56, 57, or anything like that. So, I guess what your question is: do you chase a number? Do you chase a level? And that's what I'm not going to do. I'm not going to chase. If I don't get filled at the 50, like initially I had that level, then I'm going to cancel it, like I suggested that somebody do, and look for the 40, or wait for another opportunity. But I wouldn't chase it. I don't know if that answers your question. Okay, overflow. All right, market did kind of hold the 50 area, but it got down to 47. So obviously, was a little riskier. But if you are getting paid off, if you're looking for a 4-point range, again, I said get in a little bit lower. If you got in a little bit lower, you held on to it there, you got a nice rotation. So lower, I mean, we're talking about a point or 2 points off of a level. That's how I would adjust based on the price action prior to that 50 area getting triggered. And I suggested that maybe get in at a lower price because of the price action. So you have to make adjustments to the price action prior to a level getting triggered, which is this 50. This is a kind of a prime example of what I'm talking about. We made the adjustment accordingly. Right. You can't, yes, that's the problem with most, if you're looking for some kind of indicator to tell you when to get in, yeah, you have to believe in what you're doing, and you really are looking for that rotation, that flush one way or the other to get you into an area that you feel that's good support and resistance, and then you can scalp. To wait for the market to get up there and then to get in afterwards, you kind of miss the whole rotation, or you get it at the wrong time. Obviously, it's a little bit riskier to have your trades in the ladder ticket prior to a level getting triggered. If you're confident enough to be able to believe in the work that you're doing and the work that we do, and you feel comfortable with the levels, then you put those orders in there and let the market do its thing. Also, make sure when you put your orders in there that your stops are in place as well. So, to look at some kind of indicator to give you an idea that to when to jump in usually is going to be a bit too late because most of those indicators are laggards more than anything else. All right, market coming rotating back down. We're looking at the 40 areas, the next support level. We included some new levels that we talked about that are in the there they are in the chat box area that you should be looking for on the downside. And we included some newer levels that we had, the 04, 95. And I don't know which way the markets are going to go. Like I said, we are not here to try to predict the market rotations, and these markets change their mind quickly. So, so you're going to get up to the 40s today, the 50s over the weekend, or are you going to stay in the 40s?
I think we're going to get up. Let's see. I'll tell you real quick. Let's see. The high today is supposedly 44, 55 tomorrow, and 58 Sunday. Then we're into the 60s all next week.
Feel sorry for you.
I don't. All I can say, Saul, is you are tough.
What?
You are tough. Anybody can live in that cold. It's just kind of like.
Well, I mean, I hate my winter jacket because it's too big. If I shed that as soon as I can, and 30s is shedding my winter coat because I hate it. So I can handle it as long as it's not there's no wind. I can handle it. The wind kills you, and then the wind just kills you here. We've had some goofy weather, though. I mean, it's been goofy all over the world, all over here. It's been tough, a lot of snow and shit. These guys are funny. My wife has that coat.
Hey, I've got one of those Arctic deals with a fur around it, and it sure is warm.
There you go. There you go. Oh, all right. All right. Well, we kind of hanging on the lows here after just, I don't know, half an hour ago, pushing the highs. And that's what happens in these markets. You definitely can go from the lows to the highs and then reverse in 10, 20 minutes. Be very, very careful here. We have to pick your spots. We've tried to help you with picking your spots that we've been trying to do all along here. Yeah, I mean, it's very surprising that this jobs number is creating such a, well, we're only down a little bit as far as the S&Ps are concerned. But, well, we'll see what happens. So, again, if anybody has any questions, better ask now. Again, we focus more on the morning hours, so we're getting here towards the end of our morning session. And again, there are reasons why we focus more on the morning hours. The dynamics changed, the volatility changes, the ebbs and flows changed, how the volume changes and how many people are trading changes. If you made money in the morning, then a lot of people, at least, leave and are trading smaller. Just saying.
If the shoe fits, wear it.
Just saying. Yeah, that's funny because let me tell you something about Squawk Box from the floor. I've been on the floor, obviously. I've been trading. I traded on the floor. And there's an energy that occurs when the market extends or gets some business. I guess you need to hear the person squawking to be able to get some idea of which way the market might be momentum trading. Really, what you call noise that occurs from a squawk box that occurs from the floor. To me, that's like I've heard that guy talk. I'm like, this is not really real, is it? So I mean, considering I traded on the floor, I know what the sound means, what it doesn't mean, and then to listen to some guy squawking on the box to tell me what's happening on the floor, I can't. To me, it's interesting, but I have no idea what the hell this guy's saying because I'm here to the floor. I don't need him to tell me what's going on. I can do it myself. And so I don't know. I'm just I don't know how you could figure out from a squawk box that what's going to happen on the pit. Meaning that I traded on the pit for 25 years before we had to change over here to. I love the pit. There was uniqueness to it. Um, there was energy to it that's unique and it's obviously a lost art, right? Because it's not going to ever happen again, probably not. But it was an animal in its own dimension, that you can never replicate listening to a person on a squawk box. I would love to visit the CME floor also. You could have come to my booth on the floor. I would love to be there. Trust me. They closed the floor down. I don't know if they do tours now or what. I know there's a pit open, one of the pits that are open, because my friend told me that they're open. But as far as visiting the floor or training floor, I would love to be on there. I would be the first person. If they open that floor up again, I get my booth up there again, no problem, because this is tough staying at home. Yeah, but yeah, there was reminiscences of a bond trader. Thanks a lot. I appreciate it there, Helmar. You're the best. Always knows how to put me in my place. How do you pick your levels? We use the technical analysis that that we teach. We are looking for areas that we feel that have worked for us in the past, and there's a dynamic that occurs on technical analysis that reoccurs that gives us a good feel for levels. Does it work every time? Absolutely not. But again, it's something that we focus in on to give us our opportunities to trade, and it helps us stay away from trouble, like when it's chopping around and it's bouncing around in like what I call the no trade zone. I try to stay away from that area because we're not giving in. It's in the middle of a range, and then when you trade a few of our levels and it goes back into that range, it's harder to even get excited about anything. So yeah, bond pit was the place to be. You trade with 600 other people yelling and screaming. There's a lot of energy there. I cannot replicate 600 people screaming on a squawk box. That I can tell you. That I could tell you. I love that squawk box stuff. I mean, when I first heard about it, okay, I was like, seriously? There's a guy sitting there just telling you what the bids and the offers are. I mean, I was like, what? Sign language. Well, there was some uniqueness to the sign language because, if I was trading like, quantities, there's different hand signals for quantities. So I guess hand signals would equate to sign language, so there were different ways of telling a person on the other side of the pit how many contracts you want to trade, what price, and so on and so forth. Obviously, it was a lot easier when things were slower, but when things picked up and the volatility was there, it was, I called it controlled madness because everybody yelling and screaming and everything staying under control, even though it looked like chaos was around you, and it was. And I'm just wondering how that person on the squawk box could replicate the chaos that was around him or in the pit when he's squawking. How do you say chaos in squawk talk? Okay, I got to stop about that squawk though. It's just mind-boggling to me. When I first heard about it, I was like, what? This is for real? This is really happening?
I'll tell you what, that 50 was a killer spot.
Yeah, 50. Yeah, it held. It's holding nicely. What's Bernard giving me here now? All right, that was funny. Yeah, it was funny. How do you not laugh at that? I mean, look, you know what, you see the market crashing like that, and look, it happens to us when we have a bad position, right? Uh, you know what the worst feeling about that is that when you have that position on and it's wrong and the market's doing that, there's there's no worse feeling in the world. I don't care how much screaming is going on. You're just like, the bottom falls out and you're like at a long position and you're like, oh God, what just happened here? So think about that. Forget about this guy yelling and screaming. And think about what he was saying, that 40 handles or 60 handles. We get these moves like they're nothing. You know, that's why we get these moves now. How do you trade that? Well, you trade that. Here's what happens when that happens. I mean, he's sitting there telling you two, we're getting a 4 out, we got a 2 out, we got one. We're just like, when you're on the pit trade and you're like, sell it at 10, sell it at 9, sell it at 8, sell it at 7. You're not getting anything. I mean, there's nothing being traded at those prices. And the market is going down like that. There's nothing being traded. You just have to, you're just trying to sell whatever you can. That's why it's moving so fast. That all of a sudden, all the buy orders are kind of pulled, or the brokers are seeing what's going on, and even though they have a buy order at 10, they're not going to fill it till 6 or 7 because they can get a better fill for them because they've seen the market completely crash out. But they also have a problem there too, that if they don't get filled and it rotates back up, that they get stuck with that fill at that price. So anyway, yeah, I mean, that's kind of cool. But I mean, when it's happening in the pit, you are just trying to sell it and just putting out, just sell it at 2, sell it at 10, sell it at 9, sell it at 8. Now, I will say, on the flip side to that, if I was short and I do that, that's a really good feeling. Or I'm short at 20 and I'm saying sell it at 9, sell it at 8, sell it at 7. And I'm like, oh, I'm just pressing it now. That's a good feeling. That has happened also. Then you ride that little rotation down. Anyway, thanks for your help there with bringing that squawker back to my. But if you looked at some of the other stuff on that YouTube stuff, some of the editing stuff is very interesting. The documentary on trading on the floor, I've seen that one. That's good. All right. What do we got here? We got market a little bit weak. Kind of holding. We got up to the 58 area that we had. That first support level that we had now became resistance, and now we're continuing to push down here a little bit. Got support down at the 40 area.
I like that 46. I'm getting where I like all these numbers. That's not good.
Oh, gotta be careful here because they, bonds tried to rally a little bit, and then we tried to rally the bonds. I don't know. We're following the bond market, it looks like. And that's not a good thing. That is absolutely not a good thing. All right there, Bernard. You take it easy. Have a good weekend there, Lamar. Take care. All right, Don. Thanks for chit-chatting with me Friday. Always a good chit-chat. And we'll be back Monday and Tuesday. I'll be back Monday and Tuesday, and you'll carry the mantle the rest of the way for me.
Oh, bless your heart.
We'll see what happens today. It could be an interesting day. Like I said, we have to close above that dominant. What's that high in the dominating bar from last Monday?
Yeah, let's see. It is 27, 44, 27, 50.
So we got to close above the 28 area, somewhere in that range. 44, 28, to see if we can, if we fall in that range, it might be a little bit of trouble for this market. We'll see. We shall see.
Yeah, I'm going to quit this time. I promise.
Are you?
Yes, I am.
Okay, good. You love that 46 so much.
I did. I was thinking we'd get back to the 50, but this is close enough.
There it
goes.
There it is. You just had to get out.
Yeah.
Always is like that, right? Always. All right, everyone. We'll be around if something does happen crazy. We'll maybe just jump in here. We got levels on the downside, extra levels on the downside that we gave out. You can put down if you can put down 80 below the 95. That'd be my next complete washout level if we really collapse. And that's all I got right now. So. All right, we are definitely whipping around here.
Hey, I got a question for you. if I share my screen and I quit sharing my screen, will it rotate back to your screen?
Well, I have to say, will it rotate back to my screen? No,
Okay.
no. It'll just go to. You have to. I have to be in here and say that you're going to show my screen. So
Yeah. Okay.
so that's what I think. That's what, because I can't like show my screen and go to yours and say it'll automatically show your screen. That won't happen.
Well, I know I've got a share screen deal. I can click on it. It will share my screen in case yours are not up and running. But if I log out, does it automatically revert back to your screen?
Yeah. You know what? Ask our IT guy when he shows up.
Okay.
Because I don't know. You know who our IT guy is, the guy with the sunglasses.
Yeah. The Blues Brothers.
Yeah. Blues Brothers. All he needs is like a Hawaiian shirt and a hat.
That's it.
That's it. Yeah. It'd be perfect. I mean, you don't know if he's like on the beach or in the ice packed.
I think you need to get you a chair with an umbrella and a camera in it.
Right. And the sandy beachy background.
There you go.
Instead of the floor background, right? This is perfect. He's not here to even like reprimand us. I love it. It's awesome. All right, so there we have our extra levels down on the downside. We have our levels to the upside. Right now we got a little resistance around the pivot area there, if you're so inclined, but anything above 75, I think it opens up the door to higher trade. We'll see what happens. We keep in that 44.28 level in mind for a close on the day. We'll see what happens at the end of the day. And we'll get back here later. All right, Don, take care. Thanks a lot. I'll talk to you.
Have a good weekend.
You too.
Hey, a couple quick programming notes. I did send out earlier an opportunity to sign up for the service at a discount. I can look to send it out again. I've got a couple people that had raised their hand that were interested in signing up for daily access to this Trade Along live session with Saul. This is going to come out to everybody now. John, thank you. Saul, thank you. If you want to review the website, it's tradealongtradingacademy.com, tradealongtradingacademy.com. Very simple proposition here. This is a educational only service done in a trade along format. Sal is your host and mentor. Sal's been actively scalping and trading for 25 years or so. He is a veteran of the trading pits in Chicago. He's also available to work with traders on an individual basis in a private Zoom classroom and teach you his methodology and how to set his proprietary scalping levels. That's what we call Sol's mentoring and training. Hey, David, how are you? Hey, Kent, how's it going? Tony Z, welcome. Sam, I just sent that out, Sam. I think you signed up. Let me know. Hey, Roop, Zahurl, Ron, Robert, Flock. Hey, Flock, how you doing? Philip, Patrick, Michael, Marlies, Julio, Frank. Hey, Edward, Anupam, Anand, David. Let me know if you have any questions. It's self-explanatory. It's usually $379 a month. Right now, it's on for $150. If you get the $150, it rolls over, which is a great deal. For those that are part of our services or guests, you want to invite your friends, it's tradealonglive.com, tradealonglive.com. We're here from 9 a.m. to about 12 noon. The afternoon is reserved for Sol's mentoring and training. If you're interested in that, let us know. We talk privately about it, or you could go to the website and review, tradealongtradingacademy.com, tradealongtradingacademy.com.